Good morning, everyone. My name is Michael Naidrich, and I am the COO of AmeriVet Securities, and I am pleased to be joined by my partner, head of all things rates, liquidity, and the Fed, CFA Gregory Faranello. How are you, Gregory?
Good, Michael. Good to see you.
Feeling good? Feeling a little tired like the rest of us here in the States?
Indeed.
It's quite an interesting evening. So let's get right to the elephant in the room, and let's speak about the election last night and what this means heading into this morning. I know we're seeing a little bit more results.
Yeah, so Mike, good to be here again. I mean, crazy night overnight. You and I spent a lot of time together sorting through it. And if you look at the rate market in general right now, 10-year rates are trading just a little above 75 basis points overnight. We were 95 to 75. So we traded in roughly a 20 basis point range, fairly dramatic. Obviously, we know the results. I think the market is more focused on Congress right now as we try and work through the results for the White House.
Yeah, look, we all know this is going to take another few days to sort out, and we're not in the political presidential prediction. So, but what do the dynamics mean as far as the congressional side things in the short term?
So that's a great question. I think heading in, the market was trading with this sentiment of a potential blue wave, if you will. And I think if you look at the price dynamics overnight, in particular the rate market, which I think has really been positioned that way heading into what we saw last night, you gradually saw a strong momentum and tone to the long end of the Treasury market, which has really been positioned short. I think with this notion that we could potentially get a blue wave, a lot of fiscal aid, which you and I have talked about over time, and that sort of dissipated over time, taking us really to where we are right now.
Okay, so here we sit, and it's interesting because we have the Fed meeting today. So with all this sort of unknown around the election, how does this line up today with the Fed?
Yeah, so 2-day meeting, Mike. We start today, tomorrow. Look, I mean, I think the Fed continues to be very focused on the fiscal side of the equation. When you look at potential themes in the marketplace now, the Fed has really pushed back dramatically to the fiscal side, wanting more fiscal liquidity at this point, and in some instances, really even questioning their own ability here to influence the real economy on a short-term basis. So I think they've got a close eye on the fiscal side of the equation. Clearly, the outcome of what we saw last night in terms of when will we get some clarity in terms of the election will definitely play into their mindset. But on a short-term basis, we're not really expecting any demonstrative changes from the Fed tomorrow.
Yeah, one would think that, but I would say that they're probably going to continue their focus on inflation and employment. If you can touch on that for our client base, I'd really appreciate it.
Sure. So, longer term, the reaction function of the Fed has been focused on inflation and maximum employment. They've talked a lot about that in between meetings in terms of what that potentially means. More so on the inflation side, being specific with regard to numbers, that they want to hit that 2% target and then actually let inflation run above that target for a period of time. With regard to employment, they've been less clear. And there's been a lot of discussion in between meetings in terms of diversity, inclusion, K-shaped recoveries, where the economy is at, where the economy really was at the beginning of 2020 before coronavirus. So we continue to see those themes as being very, very prevalent right now. But in the end, on a short-term basis, we think really what motivates the Fed to potentially change their tone or change their stance really lies more so on the fiscal side. The employment side, the employment picture has recovered, I think, better than most expected. On the inflation side, again, things are moving in the right direction, but I think the Fed views that as a multi-year type of situation right now. On a short-term basis, though, I think what happens on the fiscal side is going to be more meaningful if we hear a change out of the Fed in terms of their short-term tone.
Yeah, it makes a lot of sense. And there's such a big focus on short-term rates. Maybe we should talk a little bit about your view on the longer term and the funding rates right now, thinking like treasuries, mortgages, corporates, et cetera.
Yeah, so we've got treasuries are still extremely low here. close to all-time low rates. You look at the mortgage market, all-time low rates. You look at even corporate funding rates right now, all-time record issuance, all-time record low rates. So financial conditions, the way the Fed would look at things, when you look at long and short rates, you look at credit rates, you look at spreads, you look at liquidity, you look at equities, you look at the dollar, financial conditions are still very, very loose here. So short term, the rate market right now is still highly accommodative, right? Take a picture, if things do shift and things do change and rates continue to back up from these levels, the Fed could very well get involved. But on a short-term basis, I think right now financial conditions are still they're still very, very loose.
So, we do a lot of focus here on the rates and the short-term rates. I'd like to talk maybe a little bit just about the equity markets, which you and I were going back and forth on as the futures were flip-flopping. I guess my question is this, I think there's some comfort in that we're going to have a Republican Senate here, it looks like, and maybe a Democratic president, and the markets have responded pretty positively today. If Biden holds on here and he takes victory, he's talked about potential shutdowns again. What's your thoughts here on, maybe the markets moving forward?
Yeah, so if you look at Europe, if you look at the ECB, if you look at lockdowns specifically, if you look at the United States, if you look at the economic data here in the United States, in many cases, the economic data here has actually been quite good. So you look at the ISM numbers, extremely strong. You look at the housing data, extremely strong. If you look at the employment data, it's slowed, but it's still been very, very good. So there is something to be said, I think, within this window of time with regard to managing the virus at the same time that we manage reopening. And I think the economies and the governments around the globe that do that effectively are going to be the economies that accelerate in the markets that outperform over time. So my view in terms of the U.S. going forward is it will really depend. It will really depend on the mindset of what we have when the outcome of this election is resolved. But right now we have a lot of momentum heading into 2021. The U.S. economy looks to be in a good place, but slowing, but still in a relatively good place as we look forward to potentially a vaccine heading into 2021. The U.S. consumer coming back to a place in time that we may not be back to where we were at the beginning of 2020, but moving further in the right direction.
And it's going to be very interesting to see, how this all shakes out. Greg, I just want to thank you again for your time. I know our clients, when you and I were on a call yesterday, one of our clients loves speaking to you and your insights. We'll be paying attention tomorrow, and I'm sure you'll be filling us in. So if any of our clients would like to speak to Greg, please reach out to your client representative. And as always, continued safety for everyone. Thanks, Greg. Great speaking to you, pal.
Thanks, Mike.